They made sure that they listened to everything that I told them, and they were able to get this in less than 10 minutes, okay? They were in and out. You ever wonder how some entrepreneurs seem to magically get 100 plus $1,000 in funding? And I'm talking about the real ones, not the ones that just say they get the funding, while others seem to struggle to get that one approval that they really need to really scale their business. Well, I'm gonna tell you the truth right now. It's not magic, none whatsoever. It's having the right knowledge and strategy, ladies and gents. So what I'm gonna do is I'm gonna put on a masterclass to show you how to get access to major capital the correct way, using your personal credit and banking data points, as well as a very smart sequence. So go grab your pen and paper and let's get into it. And without further ado, let's dive in. So ladies and gents, in this masterclass, I'm gonna be showing you right now how to unlock over $180,000 in business funding. Okay, this is geared towards the people that wanna try to do this themselves. Again, I know there's a lot of people out there that tell you that you have to go through them to get a certain amount of funding and things like that. You can even go through me, but I love to show people that you can definitely do this yourself before you try to access me or anybody else, okay? Always remember that. The only upside to using me or anybody else is you're utilizing our relationships. So I have a lot of relationships with a lot of certain, bank lenders and underwriters and things like that give me so many data points, so many things that can really help each and every client. Like for example, when a client, if a client comes to me now, and let's say they don't get approved for what they get approved for, I can go back to that relationship manager and tell them, hey, what was it that they were actively missing? A lot of times you can't just go back into the bank and they'll ask them that, because sometimes they just won't give you what you're looking for. So a lot of times I can do that and actually restructure everything else and then give people a way higher limit after that. And then on top of that, me utilizing corporations to get people $500,000 and more is even more of a cheat code. But again, this is geared towards everybody that wants to do this themselves. They're like, yo, I don't want to do any commission fee or anything like that. I want to do this myself. I just need the right play and strategy. This is it right here, okay? Because I've given this to so many different people, so I'm gonna be giving you a lot of different data points and sequences that's really gonna help you, and I'm gonna go from A to Z, all right? But before we actually talk about getting to the funding phase, we actually have to fix the foundation, okay? Which is your personal credit, ladies and gents. Please understand this, you cannot run away from this. So think of your personal credit as a report card that you give to lenders before they actually hand off the money to you. Always remember that. You want your score to at least be a 700, but, the score is not enough, okay? And on top of that, you need your utilization to be under 10%, little to no inquiries, and absolutely no derogatory marks. And I'm talking like collections, late payments, even paid ones, okay? So these are just the basic qualifications that you need to have. As far as right here, you see this person right here that has a 751, 723, and 730. I've been working with them for about 90 days now, got them finally over a 700, and they're able to unlock, well, they were actually able to unlock, as in the making of this video already, within the first week and a half, $78,000 in funding, and they're looking for over $180,000 in funding, which I'm going to be able to help them with. You cannot come with a 473, 454, and 456, okay? I'm telling you this right now. Do you see all these inquiries that this person has? Look at all these inquiries. 18 inquiries, 17, 5. Look at these collections, 7, 9, 8. So many different things that are affecting their credit, because there's a lot of people that only pay attention to Credit Karma. And I don't blame you, because a lot of people, this wasn't taught to us, but you have to look deeper into just the credit score. Sometimes Credit Karma will lead you astray. They'll tell you that you look good, or your friend told you that, yo, I got approved with not even a 500 credit score, which I don't know how. You can do the same thing. You can't focus on somebody else's funding journey and think that it's always going to happen to you. We're not in 2022 no more, ladies and gents. So you have to have your credit scores going from here to here, okay? That is numero uno. And again, I know I spoke about it before. You can't even just have a 700 credit score, okay? You cannot. And I'm going to explain this right here. Now read this with me. A 700 credit score is solid, but lenders look beyond just the number. Negative items, late payments, collections, charge-offs can signal to the lenders that you're a high risk, even with a decent score. So even if you have a 700 score, those negative marks can limit your ability to get approved for funding or loans. Removing them improves your credit report, increases your chances of securing better terms, as it shows you're managing your credit responsibly. What does that mean, ladies and gents? This won't work, okay? That's what that means. You can't come with a 700 credit score across the board. Let's just say you don't even use Credit Karma. Let's say you only use the Experian app and you bought all three scores, right? And let's say you look like, oh, I got a 700 across the board. You know, I'm ready for funding. I know I can do this. Hold your horses. You're looking at everything surface level. You gotta dive a little deeper. You know why? Because this can be the back end of that 700 score. And I will explain. Credit card use, 39%. Payment history is good. 3 derogatory marks. Credit use is good. Total accounts, hard inquiries, 11. 11. And I know you're thinking, no, I just need these scores and I'll be good. No, you know why? Because when lenders open your credit report and profile, this is the second or third thing that they look at. This is the first thing that they're going to look at, okay? This is the very first thing. So they're going to say, okay, they got 3 derogatory marks. Okay, so they have a collection that's paid off and they have 2 late payments. And the late payments were from 3 years ago. The collection was from 8 years ago and they just paid it off. They have 11 inquiries. The credit card uses 39%. Let's unpack this, okay? 3 derogatory marks, and I said a collection. Even if you pay off a collection, ladies and gents, it's still affecting your credit score. If it's there, it's affecting it. It does not matter if it's a 0 balance or it's $1,000 balance. It's the same exact thing to underwriters, especially in this economy right now. It just shows them that you paid off something now that you should have paid off a long time ago. And they don't want to run the risk of giving you capital that you're looking for if you have this on your credit report. Yes, you could definitely say, well, I paid it off on time. You know, it was probably, you know, a financial, you know, distress. I was going through something right then there, but I did try to make everything right. Yes, I know that. You know that. They don't know that. They will never see you. They can only go off of here. They'll never see how great of a person you are, okay? So they only go off of this. And if you suck on paper, they don't care. They don't care about this. You know what this and this looks like? This right here looks like a really, really dope Lamborghini. Dope, super dope. But when you pop the hood, you don't see no engine. So you know what that means? It looks nice, but it's not going anywhere. Literally nowhere. It's just something nice to look at, but it's not going to give you what you need, okay? Next thing, inquiries. If a lender or underwriter sees that you have a lot of inquiries, especially from in the past year with really under the 6-month mark, they're going to think that you're fishing for credit. You're thirsty. What are they trying to obtain? What are they trying to get? Are they trying to get a lot of capital? Yeah, that's great, but why? Are they in a bad situation? A lot of underwriters always think the worst before they think the best. Why? Because they have to protect home plate. They have to protect whatever banking institution that they're backed by. They have to think of them before they think of you, okay? You want them to compete to lend you money, not to try to brush you off, okay? So you have to understand that. So you would have to clean these up, even if your score looks like this. 39% use? No, this needs to be 10% or lower when you go for funding. I don't care what it is. I don't care what you do throughout the month. You need to find your due date, your statement closing date, and you need to allocate that correctly and make sure that it's under 10%. And I know a lot of you are probably wondering, well, that doesn't make any sense. How can I have a 700 score but have all these issues on your credit report? Because a lot of you don't understand that your credit scores and reports are based off an algorithm that you choose to do on a day-to-day basis, okay? So let's just say you have this, but let's just say when this first happened, you had low credit scores. Let's say the high 5, low 6s. Let's say it was like 3 years ago or something like that. After a while, your credit scores are going to start adjusting to these negatives on your report. It's going to basically, and I'm trying to keep this in simple terms, get used to having those negatives. So it's going to keep pushing on even though you have these negatives. So after a while, it's really affecting you in the beginning. Then you keep going, then it's not affecting you as bad. You keep going, it's not affecting you as bad. Then it's not affecting you anymore. And then you keep going. It's basically like you have a wound or something like that on your hand or something, and you really don't attend to it. So now your body's just trying to create a callus over it. The problem is still there, but it just created a shield or something over just so you can keep going so it won't hurt as bad. You know what I'm saying? But if you don't take care of it, it's going to get worse. This is the same thing. So this is how you can have great credit scores, but still have issues on your credit report and still get denied or get low limits. So understand this and please move properly. Look into your credit report. So if you have Experian, MyFICO, MyFreeScoreNow, Identity IQ, links in the bio, you can look at everything and see what is actively going on. Even if you've never looked at your credit a day in your life, okay? Please understand this. Now, while I'm about to get into the next session, I just want to let you know now that, remember, most banks pull from, when it comes to the business side, Experian. Just a little gem for you. Some like Chase and Amex might even sometimes do a double pull. That means that you have to treat your personal credit like gold because it's your ticket for funding. Now, let's get into the second one, which is the banking data points and hidden metrics. This is the thing that I want to talk about next. Here's where most people slip up. They don't realize that lenders are watching how you use your bank accounts, okay? Not just your credit report. This is what I like to call banking data points. And I didn't make this up, I'm just saying, okay? They're looking at it as your average daily balance. So you got to make sure that you're keeping money sitting in your account because that's what really matters. They also check your deposit history and your transaction volume. So in simple terms, if your account looks busy and consistent, banks will trust you more. So don't just open an account and just let it sit there, let it collect dust or anything like that. You want to show activity, you want to show consistency, and that will increase your funding chances significantly, okay? So let's break that down a little more. So with the first one being, of course, average daily balance. So of course I said right here, utilize fractional reserve banking. Now for my people that don't understand what fractional reserve banking, it's literally just giving you leverage to show the banks again that you're here to stay. A lot of banks don't want you to just grab and go. A lot of them are not looking for that. They know that you will do that, but you don't have to make them feel that way, okay? You want to make them feel like they're the only girl in the world for you. All right. So make sure that when you open the Chases, the PNCs and things like that, you want to make sure that you put money in these business accounts, even if your business is not profitable right now. Okay. What you want to do is you want to make sure that everything is aligned up. You want to make sure that you're putting money in this account, even if it's your personal money to start out. Okay. Start out by putting $50 to $1,000 in there every single month. Take money out, pay something. Go get some gas. I don't care what you do. Just show activity. Even while you're getting your credit scores in order, okay? You want to make sure that you're doing both of these at the same time. So when you do get your money, I don't care if you utilize your check that you get every 2 weeks. You put it in that account and then you pay your bills. However you got to do it, okay? Because fractional reserve banking is basically where the bank gives you a rating, a grade, all right? And some banks it goes from 1 to 5, some banks it goes from A to D, I think, and so on and so forth. These are like really internal data points, and when you keep a certain amount of money in that account, they see you as less and less of a risk, but they can lend to you more. So if you keep $10,000 in there, they're able to lend that out 10x. So now you scratch their back, they'll scratch your back. So now when you go apply and you ask for something, whether it's $10,000 or more, your baseline or your home plate is at least 10,000. So at least you can get that and some, and then some, okay? So if you ask for 10,000 or you have $10,000 in there, or you move $10,000 around in that account every single month or anything like that, even if it's $1,000, then you could possibly ask for 3x more, okay? Of course, you can shoot for the sky, and then also they'll come down with it, okay? I'm not saying keep $500 in there. I'm just saying utilize fractional reserve banking, utilize keeping money in there. And just to give you a few more gems, when it comes to Chase Business, in case you have it or don't, you have to keep a minimum balance of $2,000 in there. If not, you're going to get hit with fees. PNC has the same thing where it's a $500 minimum balance. So you don't want to get hit with these fees. So at least you can keep $2,000 in there plus another $2,000, and then you're allocating money in and out. Now you look like a busy business person. See what I'm saying? And I know some of you are thinking, well, what if that's too low and they still might, give me relatively lower limits? As long as you have the credit scores, you have the criteria, and then on top of that, you're having this information as well, you're in great standing, because business owners have, bank accounts all over the place. So as long as you're just showing them that you're really important, I'm I'm trying to do everything I can to really, put more money in this account. I'm going to put more money in this account, but I'm just looking for more capital from you. This is what's really going to help you. And also just want to give you some more data points. When it comes to Chase, in certain regions, Chase will pull from Experian for the most part. But in certain regions, they'll also pull from TransUnion. How do I know this? Because when I applied for Chase on the business side, and this is just from my experience, okay, this was 2020, 22. I think the end of 21 or beginning of 22. They pulled literally my Experian and my TransUnion at the same time. All right. And then when I've been helping a lot of other business owners get approved, sometimes they'll pull both, sometimes they'll just pull one. Most of the time it's Experian. But you have to understand also to have all three bureaus set up properly so they can actually, get you approved. Another data point I want to give you, another gem. Sometimes when you go apply, sometimes freeze your TransUnion so they only pull your Experian. That actually works. And if they say, we can't verify, then just unfreeze your TransUnion and let them pull your TransUnion as well. Don't be afraid of the inquiries, okay? You can always wipe them or just let them sit for 6 months, either or. PNC. PNC is another gem. They're actually kind of a little weird when it comes to them. When it comes to their requirements, especially from my experience helping a lot of business owners and things like that. In certain cases, when it comes to their credit cards, sometimes they want a 760 or higher when it comes to your credit score. So make sure that your Equifax is at least a 760 or better. And the crazy thing is, when it comes to their credit cards, they pull your Equifax. But when you ask for a business loan or a business line of credit, they pull your Experian, which is something that a lot of business owners really don't know, and a lot of people don't know, okay? So understand that. So sometimes what you want to do is you want to go into that bank, doesn't matter what it is, it doesn't have to be Chase or PNC, whichever one that you're going for, and ask the business rep, what are your products? I seen this product online. I seen this product online. Where do you guys pull from? What are you guys pulling from? And trust me, again, they will definitely tell you. They'll tell you what, where they pull from, because again, they don't want to waste their time and they don't want to waste your time either. So they'll definitely tell you. And if they don't know, then tell them, hey, can you find out for me? Because I've been getting a lot of data points, you don't have to say from where, but I got data points from here, and I just want to make sure, that I have all of my ducks in a row. So when I do sign up or schedule a time to sit down with you, I have everything laid out. I have everything ready. Okay. Do your due diligence. So when you go to that credit union, PNC, Chase, ask them this. Hey, is it going to be a double pull? Are you going to pull my Experian? Hey, for the credit cards, are you going to pull Experian? Are you going to pull Experian 8? Like, what are you going to pull from? Hey, are you going to pull my Equifax for PNC? Key Bank, are you only going to pull Equifax? Is that what you're going to do? Are you going to do this? Are you going to pull from Experian? You want to ask all this stuff. You got the note app on your phone. Utilize it. I'm pretty sure you haven't utilized it for anything else other than your grocery list. Utilize it for something that's really going to help you. This is how you get the hidden metrics. This is how you actively get the information you need in your surrounding area, because every bank is not made the same, okay? So again, get your credit scores right, get all the information as far as the fractional reserve banking, put some money in that account. Then the next thing I want you to do is go to these banks and ask them, what are you looking for? And don't let them muscle you either. Like, yeah, we can apply now. No. I'm telling you, get all your information first, come back later. Don't let them influence you to sign up now knowing that you're not ready, because they will definitely do that, okay? So understand that. Now, once we get into the funding phase, now let's say you have your information as far as, what banks you want to go for. Let's say you have the credit scores and the credit profile that you're looking for, because again, remember, it's not about your score, it's about your profile. I just want to go over really quick the differences between no PG and PG funding, okay? I'm pretty sure you already know, but I just want to go way more into depth, because a lot of people are missing the point when it comes to this, okay? Yeah, no PG funding sounds cool, it sounds sexy, but this isn't for you yet, okay? So let's talk about the options. You have two main paths when it comes to business funding, all right? Only two. There's personal guaranteeing and then not personal guaranteeing, okay? PG funding is safer and gives better interest rates, but it does tie your personal credit to your business, okay? But on the flip side, there's no PG funding, and that means no credit check, no personal ties, and things of that nature. But please understand this, ladies and gents. There is a catch when it comes to this. And what I mean by that is a lot of times it's higher interest rates, aggressive repayment terms, and daily balance payments, okay? For the most part. And this can definitely hurt your business if you're not making strong enough revenue. Sometimes they'll still even deny you just for that. So understand this, yes, you can get funding with bad credit, but it might end up costing you way more than you think. That's why fixing your credit is always the smartest move, okay? So with that being said, the PG funding route, is the traditional route. It's the route that I took. This is the route that I want you to take, okay? Again, lower interest rates. You want to get approved for this, all right? You want to get approved for this bad boy right here. You want to get approved for $38,000 starting out that you just got. And with my client, it only took them 10 minutes to get this. It only took them 10 minutes. You know how they did it? Because they got the right information from the bank. They got the right data points from the bank. They also fixed their credit score. They fixed their credit profile by beefing everything up on the profile side, making sure that they had a good mix of installment loans, credit cards. They made sure that they had relatively high personal credit limits, at least $3,800 or more. They made sure that they listened to everything that I told them, and they were able to get this in less than 10 minutes. Okay, they were in and out, and the crazy thing is they only needed $25,000. They exceeded that. They got $38,000. Okay, and this was easy for them. They're definitely going to get way more than $180,000 once they come back. I'm just telling you that now. But when it comes to no personal guarantee funding or no PGing, I get a lot of business owners that say, hey, I don't have time to fix my credit. I just need the capital now. I do make enough. What are my options? This is where merchant cash advances come in, okay? Merchant cash advances aren't bad, but you have to know what you're doing. With merchant cash advances, higher interest rates, again, aggressive repayments, things of that nature. Everything comes at a cost, okay? If you don't have your credit in order, you got to have the right revenue. So that means you got to be generating like $3,000 to $5,000 a month at the lowest. And then again, your payment terms are going to be extremely high. Look at these examples that I was able to help people with, but I wasn't a fan of. They got approved for $50,000, 9 months. Look at their payments weekly, over $2,000. A lot of people can't do that. Can you do that? They had the capital, thank God. But, after everything is done, they're going to pay over $70,000, in interest, and that's what's crazy. Look at this one right here. They got approved for $20,000 for 10 months, $680 weekly. Yeah, it's lower than this, but that's still a lot. What if something sinks? What if something happens in your business and you can't actively, take care of it? Now you're taking money out of your personal life to put in your business, and that money was supposed to help you, keep groceries in the house. Maybe you had a flat tire or something of that nature. Now you can't do that because you have to pay this loan. If not, your credit is going to be even more shot. And they're going to pay over $7,000 in interest. You see what I'm saying? This right here, interest right here, $7,000. Interest right here, over $70,000. This right here, no interest, 0% interest. Well, this is the preferred card, but a lot of times it is 0% interest. The preferred doesn't have 0%, but I'm saying right here, this and this is not the same. This and this is not the same. You want this. This is easier. This is lighter. All right. This is way harder to really, continue to keep going and things like that. You don't want this after a while. And I told the two people, I said, hey, let me fix your credit, and thank God they agreed to it. But merchant cash advances are very aggressive. You don't want to always go that route. You don't want to at all. Always just get your credit right, because this could come and bite you in the behind. Not saying that this can't, but you have to have the responsibility and the actual knowledge that I'm giving you literally right now to help you in that process, okay? So please understand that moving forward. And then on top of that, I just want to say this as well, because I get a lot of people in my comments saying that, yeah, but you have to pay the money back and all this other type of stuff, yada, yada, yada. They don't tell you about that. Listen, guys, understand this. If you believe in your business, if you believe in that goal, if you believe in everything that you're talking about, as far as writing on paper, talking to your homeboys, making sure that everything is right, then you don't have to worry about this. I'm not telling you to go spend $38,000 outright just like that. Start off with, just the whatever you need in the beginning just to get everything started. All right. Don't bite off more than you can chew. Just because you have a $38,000 line of credit does not mean that you have to use it right now. They're only going to give you interest off of what you use, opposed to this. No matter if you use the $50,000 or not, they want this weekly. All right. It doesn't matter if you use $1. They still want $2,000 every week. With this, if you use $10, they're only going to give you an interest off of that, not 38. Okay. So please understand this. Make sure that you have the right strategy on top of the strategy that I'm giving you for your business data points and banking data points. Okay. So I'm going to continue to keep doing it. Get this right. Get this right. Make sure this is clean. Then after that, get all of your data points. Make sure that your fractional reserve banking is looking good. Also, I want to say, try to do the fractional reserve banking for at least 90 days. I know I didn't say that earlier. Try to do fractional reserve banking for at least 90 days. Let $1,000 or whatever sit in your account for over 90 days. You know, try to build up that relationship, those internal data points, things that yada yada yada, and then try to go the PG route. Okay, the PG route is going to be the best thing for you, not the no PG. Okay, now I'm not saying again they don't work. If you need it just right now, you can definitely use that if you know how to use it responsibly. I'm not your pops. I don't care what you do, but this is the best thing for you. Okay. Okay, so even after you get all the PG, the no PGing and things of that nature, I just want to show you before you start applying willy-nilly is basically having a strategic funding sequence. Okay, you basically getting approved for one credit line is good, no matter if it's a credit card or loan, but stacking multiple approvals without getting blocked is the real name of the game. Okay, it's all about your sequence. So you want to make sure that you have the right score, but you also want to make sure that your strategy is in place that's really going to help you. Okay, because you want to apply to banks that pull from basically different credit bureaus. So for example, Bank A pulls from Experian, Bank B pulls from Equifax, Bank C, Trent, you get the idea. Okay, that way each bank sees a clean credit report, and when you apply and your inquiries don't basically overlap, because this strategy is going to help you get $60,000 or more from each bank without raising any red flags. So basically it's like chess. Okay, timing and order also matters. So I just want to give you this example right here. So let's say we have Bank 1, Bank 2, Bank 3, and then we also have a credit union. Okay, so let's say you're doing fractional reserve banking with Bank 1. All right, so you do it for at least 90 days, something of that nature, and you get $25,000 from this bank. That's great. That's cool. Okay, but we're not done. Even before you start allocating this $25,000 towards your business, you can easily do this. You can liquidate this credit card, right? You can liquidate this credit card, and then you could put that business money into bank number 2 and bank number 3. So now you split this in half. You have bank 2 having half of this, and you have bank 3 having half of this. Okay. Now I'm not saying that you're not gonna. There are some drawbacks, of course, between liquidating certain credit cards. Sometimes there are fees associated with it, depending on how you get the money off. If it's whether it's manufacturer spending, or you do it through a payment processor, or you just use cash advances and things like that. Be prepared for any type of fees associated with that. But again, you don't have to do it for too long. Again, you can do it for like 60 days, 90 days if you really want to. But this is how you get the maximum amount of funding. So again, take the 25, do it in half, bank 2, bank 3. Okay, so now you have that money sitting in that account for these 60, 90 days. And while you're doing all of this, it's starting to create another bank rating for bank 2 and bank 3. So now you're still getting everything together, and then you're making sure that you strike properly. So bank 1 pulled from, Experian. Bank 2 is going to pull from Equifax. Bank 3 is going to pull from TransUnion, right? So now bank 2 and bank 3 are never going to know about each other, and bank 1 is never going to know about them. You know why? Because you allocated the sequence properly. So now you're about to get 3 inquiries, and none of them know about each other. Okay, basically you being a player when it comes to the banking system. That's what you want to be. You want to be a player. None of them know about each other. All right. Now 60, 90 days. You told them a bunch of sweet nothings. You know what I'm saying? I'm gonna stay with you. I'm gonna make sure I give you all my money. I'm gonna make sure I do this. I'm gonna make sure that you can, you can give it out to people. Bank 3, you saying the same thing to them. You know what I'm saying? Now they excited. Now they like, you know what? Bob is a good dude. Bob is a really good dude. All right. You know what? He's asking for 50,000. You know what? We gonna give him the max amount that we can give him before we start asking for documentation or anything like that. So I didn't know where you get $60,000, and this is just for examples. Okay, and I'm explaining that in a second. You get $60,000 from here, you get $60,000 from here. Now you take that liquidation money, you put it back on the card, you pay whatever fee that came with that, and now you have 6, 12, and then you have the 25 right here, all right? So that's over $100,000 in funding right here, but you're not done. Now the next place that you go in the next 30 days is credit union. And let's say it does pull from, Experian again. So what you can do is you can definitely wipe the inquiry that you got from bank one, okay? Because you did it before the 30 days are up, because I know a lot of you are going to say, well, it's connected to this card. I don't want them to shut this down, etc. No, the reason why it's not is because you're literally going to take, you're literally going to wipe the inquiry before it even gets to the 30-day mark and it actually reports, which is not on your personal side. It shouldn't. You shouldn't be going for any of those cards. But with that being said, you'll be able to wipe that inquiry, and then after that, you'll be able to go to this credit union. You rinse and repeat. You liquidate some of the card, you put it in here, and you wait that 30, 60 more days, and now you have $20,000. Now, again, you have over $100,000 in funding just by doing this type of sequence. And none of them knew about each other. And now you have all this funding to actually help and allocate your business. Does that make sense? Because these are what the credit gurus are doing, okay? These are what the people that, are just getting in the game, telling you I can do everything. These are what they're doing for you. Hopefully what they're doing for you. They're literally just, going to certain banks that don't pull from certain places, and then they try to get you approved, and then they try to wipe the inquiry, okay? Again, you can do this yourself, unless you're like me and you have a fulfillment team with underwriters and lenders that actually take your stuff and then go off of it right there and make it a little easier. But for the people that, boots on the ground, stuff like that, even you, this is how you can easily get over $100,000 in funding. Okay, it's of course it sounds simple, but it's more simple once you have everything on paper. Okay, I'm gonna go to Navy Federal, in 30 days. I'm gonna go to Truist here. I'm gonna go to a key bank right here. This credit union is nowhere else. It's nowhere else in the world. It's only here in freaking Virginia, wherever you are. You know what I'm saying? It's only in Virginia. It's only on this town. And they're talking about they give $20,000 to brand new businesses that open within the first 30 minutes. They don't do that anywhere else. And you're only utilizing this. And it's geo restricted. You see what I'm saying? These are the things that you want to do to really get the funding that you're looking for. And just to really piggyback off of this, ladies and gents, please go for the banks and the credit unions that everybody are not talking about. Even me, okay? Even me. I'm not saying you can't go to them, but I'm saying it's way easier to go to the banks that we're not talking about. There's so many banks and credit unions out there that we don't know about that's in your backyard that can easily give you, the money that you're looking for. Just because you live in the town, just because you're starting a business, they will give you the money that you're looking for. Only thing you have to do is go in there, again, like I said right here, go ask what they are looking for, okay? What are you guys looking for? What do you guys need, okay? They only give people in Virginia the money, okay? You see what I'm saying? That's what you want to do. That's what you want to go after, okay? They'll give you $20,000 here. They'll go to, Pelico Bank or something like that. They'll give you $60,000. Go to these banks that all of us, you don't always have to go to Chase. You don't always have to go to PNC. You can go to Fifth Third. You see what I'm saying? You can go to Citizens. A lot of people talk about Citizens, but a lot of people don't go to Citizens, okay? You don't always have to go to Truist. Truist is starting to get burnt out a little bit. You don't always have to go to Navy Federal, especially on the personal side. You can go to it on the business side as well. There's so many different ways and allocations that you can do to get the funding that you're looking for. You're overlooking all the banks in your area to go to the same banks right here. I promise you can get the data points from that bank and then get all the money that you're looking for. Who knows? You might be able to go to this credit union. It's a double dip, meaning that you can use that inquiry for 30 days. You have an awesome credit score, an awesome credit profile. You put $10,000 in the account. Now you got a business line of credit, you got a business loan, and you got the business credit card. You got all three of their products, and each one gave you $40,000, 4, 8, 12. That's $120,000 in funding that you just got, and nobody knows about it because we're still talking about Chase and all the banks that I know that you guys can get that are in your area. You see what I'm saying? So please just utilize this. Utilize this information for in your area. Just tailor it to your needs, okay? And the reason why that I say all of this is because the banks are tightening up and starting to deny more people even that need to be approved, even when they have the proper, criteria. So you have to understand that real wins are in the quiet banks, okay? And also know what works in New York might not work in Georgia because, different banks pull from different credit bureaus based on your location. The one in New York might pull Experian, but they pull FICO 8. The one in Georgia might pull Experian, but they pull FICO 3. You don't know because different credit bureaus are based on your location. Do your homework. Again, like I always said from the beginning of this video, use tools and lists to find which bureau pulls from your bank area, okay? You can go to ibanknet.com, and this one is going to help you dramatically and give you all the information that you're looking for in these certain banks. So now instead of them auditing you, you can audit the bank and you can see, well, what do you have? What are your liabilities? What are your assets? All from ibanknet.com. And you can see, okay, are they more so a line of credit bank? Are they more so a business loan bank? Oh, they get more business credit cards than anything. Okay, so I know I can go here for this. All right, so I know for the credit union, I'm gonna go here just for the business line of credit. Okay, for bank 3, I know that they're mainly based off of business credit cards. I'm gonna go here. They're mainly based off of business credit cards. Oh, they like more line of credits. So now you're getting all of this right here. Or they all might go just for a business credit card. Don't mean that you shouldn't do it. Just get all of them. Get all the money that you can, okay? Because that's how you get ahead of the crowd. Don't always just go how the wave is going. Sometimes you can go a different way and get way more funding. And to be honest, you can really keep it to yourself. You can really keep it, only keep it, to your family or whatever. Like, yo, I know this bank right here is going to give you the funding that you're looking for. Nobody's talking about this one. Not on TikTok, not on nothing. You know what I'm saying? And you just keep it to yourself and you get all the money that you're looking for. You can go back and get more money, okay? So let's go ahead and recap off of everything that we already talked about. So number 1, you're going to need, all right, a 700 credit score, low utilization, under 10%, and a clean credit profile, okay? You want to keep those banks active and healthy, okay? Please understand keeping them active and healthy and ask for the data points. Know your funding options and understand that no PG isn't always the best deal. Please go the PG route. I know I don't tell you to do a lot of things, because I say I'm not your dad. Do this, all right? Please. No PG isn't always it's not always the bee's knees. So, and then next, always follow the strategic sequence that you created for yourself using different bureaus and stay off the beaten path, okay? Not saying it still doesn't work, but do something, dare to be different, okay? Dare to be different. Now, with all that information being said, I know I gave you a lot. I know it's going to be a lot. You can definitely stop it, come back to it, things of that nature. I try to give you as much information as I can. And I know some of you are saying in the beginning, man, I want my credit scores to look like this, but it's hard for me right now. I'm trying to get everything disputed. I don't know what to do. Guys, the easiest way how to do it is just utilize me. This is how I'm able to help with the How to Credit Start program, where I help people with these type of credit scores get these type of credit scores, all right? It's easy as 1, 2, 3 for me. I've been helping so many people. I've helped at least over 400 people now. And I promise I'm not saying, I've helped over 400 people right now. And if I can do that for them, I can definitely do that for you, so you can get approved for this $38,000 approval, plus another 38, plus another 40, plus another 50, where you're getting over $180,000 in funding, all right? If you want your scores to look like this and you don't want to have this, then what I want you to do is click the link below so we can get you on board and sign you up right now with a free 15-minute consultation. And we're going to get your credit scores on track just like this, so the world can be your oyster when it comes to the funding process. I want to thank you guys for stopping by. Please understand this. Do not be this dude right here, okay? Don't be this guy. Listen to everything I say and make sure you rewind, write stuff down, go get those notes, and go get that $180,000, all right? And until next time, ladies and gents.